Hey all there. So we're in the midst of some pretty interesting times in the crypto space. You've probably noticed that things can get a bit wild, and we've always been one to remind everyone of the importance of keeping a cool head, especially in the face of volatility. It's all part of the game. Now, one thing we've been emphasizing is the possibility of pullbacks, and we're talking about the 30 to 35% range. It might sound daunting, but it's something we should expect. The recent drop in Bitcoin's price, which is around 15% since the ETFs launched, isn't exactly shocking. We often see this kind of correction when hitting that 61.8% Fibonacci level in the initial phase of a bull run. What usually follows is a bit of a roller coaster. People get a bit shaken, leverage gets wiped out, and then voila, the real run begins. We're talking about reaching all-time highs and possibly going even beyond that. The thing is, this genuine bull run typically kicks off after the halving, which introduces a supply shock to the system. So, what Raoul is thinking is we might experience a month or two of what he calls chop. Picture a market down about 30%, just moving sideways. It's that time of uncertainty, and caution is key. Now, of course, we could be wrong, the market has a way of surprising us, but it just feels like things are trading a bit on the heavy side. Even if there's a sudden surge, we don't see it making significant progress just yet. Now let's dive into the BlackRock ETF approval. Now if you've been following altcoins daily and caught our thoughts on a video from a month ago, you were probably prepared for what's happening now. Our prediction was a small sell-off for the approval, and it seems to be playing out that way. Check out this insight from Raoul Pal, a global micro investor. In a recent livestream, he perfectly explained why the Bitcoin ETF hype was always destined to be a sell the news event. It's like when you invest in a company during its early stages, 2011, 2012, maybe even 2013. You're a bit of a pioneer. But now, with the ETF, it's like we've just IPO'd. IPOs in strong markets tend to be a bit wild. Think back to the late 90s. Facebook went through a similar phase after its IPO. It was incredibly choppy as people took profits and repositioned. It's all part of the process, and in the grand scheme of things, it could be setting the stage for something big. Now first off, we can't overlook the fact that a bunch of folks anticipated the ETF move and they kind of front-ran it. Now these people are looking to unwind their positions. It's like, I got in early, now it's time to cash in. The ETF launch itself has been a hit, there's no doubt about that, but here's the interesting twist. Many who made a killing with Bitcoin ETFs are eyeing Ethereum now. We've chatted about this before. Ethereum seems to be snagging some of that market share. Why? Well, it's the frontrunner for the next ETF. Picture this. If Bitcoin soared by 100% because of the ETF, Ethereum could potentially go up by 300%. The reason for that is because Ethereum is a bit less liquid, meaning that the same influx of money could have a more significant impact. Now I think we broke this down in detail in one of our recent videos where we discussed BlackRock CEO Larry Fink making a solid crypto move. Now, let's talk about Grayscale. They've been a big player, but recently they've been facing some outflows. Here's the thing, it was kind of expected. People are unwinding their positions in GBTC arbitrage, closing up shop because they already had the assets and are now jumping into a different ETF. It's a bit of a shuffle, a bit of a dance, And here's where it gets interesting. There's some serious things happening on in the market. Look at the net flows. While there might be a staggering number in flows, the net flows are much smaller, around 700 million or so. Still, it's the biggest ever ETF launch in history. It's like a high-stakes poker game. All to play for, but everyone's got their cards close to their chest. Now, not many channels might be sharing this tidbit with you, but we will. Let's talk BlackRock and their iShares holdings. There have been mentions about BlackRock shifting 50% of their ETF into cash right before the pullback. And, as it turns out, they did exactly as was suspected. They bought the dip. Now they're back 100% in Bitcoin. It's a pretty bold move, selling when everyone's feeling bullish and buying when the rest of us are nervously checking our portfolios. How did they predict the market swings? Well, welcome to the world of new whale traders, the ETF fund managers. They're not just dealing with crypto. They can trade in and out of cash in any currency, even in Forex. It's like they're playing 4D chess in a financial wonderland. So, Raoul's painting a vivid picture of what's on the horizon and what we can expect in the coming months. Now, here's the thing. This Bitcoin ETF is like a magnet pulling in people's attention, especially considering how robust the markets were last year. I mean, Bitcoin itself soared by a whopping 160%, which is like 3 times the growth of the Nasdaq. That's not something you can just ignore. Now, Raoul starts by pointing out the folks in the financial advisory world, the investment advisors, the financial planners. Now, these guys, they're not scrolling through Twitter catching up on crypto drama. They're probably more likely to stumble upon this news when they crack open their Barron's magazine on a Saturday morning sipping coffee. And you can bet Barron's will have a touch of skepticism in their article. These advisors might think, okay, a Bitcoin ETF, interesting, but is it right for my clients? Then picture this. These advisors, let's call them RAAs, they chat with their big clients on the golf course. This guy asks, hey, what do you think of this Bitcoin ETF? The RAA echoes what he read in Barron's or caught on Fox News, but initially it might seem a bit foreign, a bit out there. And then, as more positive news trickles in and a few more clients express interest, the RAA starts thinking, maybe I should delve into this. Fast forward, they're having a steak dinner with a friend who runs a tire franchise and has a bit of a wild side when it comes to investments. Before you know it, they're building up orders, getting clients in, and they're in the game. It's a relationship building process, not a sudden rush. This is happening all across the United States and not just in bustling trading rooms in New York City. Now, BlackRock, the giant player, isn't sitting still either. They're steadily amassing their crypto arsenal, with over 11,600 Bitcoin in their iBet holdings. But it's not just Bitcoin catching attention. Other top altcoins like Polkadot, Cardano, and Solana are making waves. Raoul makes it clear. Solana is his pick among the big ones. It's like a horse race and he sees Solana leading the pack. As the cycle progresses, Raoul predicts the flow. Bitcoin, Ethereum, and Solana, with Solana taking the lead. This isn't an overnight shift, it's a gradual process. Institutions, fund managers, even hedge funds are slowly considering how to incorporate crypto into their portfolios. Some fund manager might be thinking, can I slip this into my portfolio without the risk manager catching on? So, it's a journey, a dynamic unfolding, and Raoul's keeping an eye on it, and he's not alone. He's subscribing to insights from the smartest investors and sharing that knowledge. It's a continuous process, like a daily exploration of this ever-evolving market, so buckle up for tomorrow because we've got more for you. Thanks for watching.